Hello, chart watchers, and welcome to Market Watchers Live with Aaron Swenlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so roughly for 24 hours. If you'd like to review an older program, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Aaron will provide me stock symbols from your questions, and I'll use those requests in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week from Monday through Friday, from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right-hand portion of your screen, you'll see a How'd We Do section with a link to a very brief survey. Let us know what you think of the show, today's show, and all of our shows in general, and provide us any feedback on possible improvements we can make to the show. We'd love to hear back from you. For those of you joining us for the first time today, welcome to the show. We are certainly glad that you've decided to join us. And for our regulars, welcome back. Just a couple quick announcements before we get going. We've got Grayson Rose from Stock Charts here. We're going to do a little everything stock charts. So just prepare about 5-10 minutes. I'll be bringing Grayson in. Tomorrow, Greg Morris will be joining Market Watchers Live. Greg's been a technical analyst for over 40 years. He kind of, follows my heart with candlesticks. I'm sure we'll have some really good discussions with Greg on candlesticks and really just a general analysis of what he sees in the market. Greg Schnell will be with us on Thursday. He's going to be talking about point and figure charts. And then on Friday, our very own Aaron will provide us an educational segment on chart patterns. So if you've been curious about chart patterns, some of the things that we talk about on the show, you definitely want to tune in on Friday. So we got a lot of great stuff happening. And with that, it's Tuesday, November 14th. Aaron, how are you doing today?
I'm doing very well. It is sort of weird, though, doing the Tuesday. I'm still trying to get used to the 5 days a week thing.
Well, this is only the second Tuesday now for the rest of your life that you're going to be on here. So sorry to mention it. Say it in that way, but it's true. Yeah. So don't plan anything Monday through Friday because you're going to be here.
Oh, goodness. Well, I'm happy to be here with you, Tom. It's always a pleasure. So that really interesting day in the market, though. We're having some little bit more decline.
Yeah, and it's no fun to be a GE shareholder. That's for sure here over the last few, really throughout 2017, but we'll talk about that some more in a little bit. But I know we got a lot going on the show today, so I'm going to let you go ahead and get into the agenda for everybody and give us our first market update.
All right. Sounds like a plan. We're going to do those market updates on the half hour for you so you can know what's going on, even though you're paying close attention to us. And as we said, Grayson Rose is going to be here to talk everything stock charts, what's going on. And I know there's there's an interesting announcement, I think, coming up. We're going to look at some momentum sleepers, some charts you might not have seen, but are showing some promise and momentum. Then, of course, there's that 10 and 10 to 1 for those of you who are new. Tom will take 10 symbols, and I get them directly from Twitter and from the live chat box here on live stream. So feel free to interact with the show that way. Our first one is going to be SM, and I believe it's an energy stock, right, Tom?
It is.
Yeah, so we've got a lot of interest in the energy area, which is getting hit pretty hard right now. So that's our first one. The scooter report, we're going to look at what's going on with scooters across the market so that we can find out whether there's more sleepers out there. And then, of course, we've got our mailbag and wrap up to finish things off. But now it is time for our first market update. And here we go. All right, Let's go ahead and start with the candle glance of the market so we can see what's going on. And yeah, again, it was one of those bad mornings, but it appears we're trying to make up some headway and take back some of those losses. And we're coming back, but we're still not very far up there. Need to get higher. The NASDAQ still in the negative, along with the Dow and the S&P 500. Now, small caps are kind of a different story. They had a rough morning, but they and tried to make that recovery, but they're back down there near their intraday lows so far for the day. And we see that Treasury yields are down slightly, or 23.86 currently. UUP dollar gap down and is heading lower at this moment in time. And when you look at gold, which usually is an inverse, gold is mostly unchanged right now as far as GLD. So an interesting dichotomy going on there. USO oil, as we were saying, energy's getting hit and hit pretty hard with USO at 11.14 currently, down 24 cents. And now let's go ahead and look at our predefined alerts. And then we will look at that lovely chart of GE, which everybody is talking about right now. So it definitely needed to go in this first market update. But as you can see, energy sector is definitely having a big problem today. You can see the XLE had a bearish MACD crossover. I can guarantee you I probably had a PMO sell signal at the same time. Cyclicals, consumer discretionary, crossed above 50. I think that's interesting because usually when we see the market not doing so well, that's a sector that generally has a problem. Russell 2000, as we see, is still having difficulties crossing below 1475. TSX also crossed below 16,000. So definitely a difficult day right now, but the most difficult day, I would say, belongs to GE, which is currently the most active on the S&P 500. And it is down, when we look at the percent down of all of the S&P 500, well, RRC just finally beat GE out, but it was leading as far as the most active percent going down. So let's go ahead and look at that GE chart for a moment. And yes, not good. I think, honestly, when I look at a chart like this, I need to see a weekly chart because all we're seeing is this move down. I know we've talked about catching that falling knife, Tom, but I think we're not ready to put our hands out just yet. Look at the weekly chart here. I would say your next area of really strong support is going to be right about here at this previous top. And that brings us all the way down to that $17. So we're at an area where we could see some support, but it just doesn't look like it's ready to put the brakes on just yet. I mean, look at the downward momentum right now. Terrible. So I don't know what you had to add, Tom, on GE, but I'm going to pass it back to you. And that concludes our first market update.
All right. Thanks, Aaron. Yeah, it's been a rough couple of days, really rough year for GE. But certainly with their reorganization plan, the market's not really buying into it. We've had a lot of technical selling that's been going on throughout the year. And now we've got income investors very disappointed with the cut in the dividend from, well, they cut it in half, 50%. It was up near 5%. Now it's back closer to 2.5%. Although if prices keep dropping, the good news is the yield will go up. But I don't know if that's much. I don't know if that's much good news. But let me go ahead and just switch over. We'll talk about a couple things here before we bring Grayson in. In terms of economic news, we are starting to pick up now throughout the rest of the week. We're going to see some more economic news. The October PPI came out this morning, much hotter than expected. It actually rose 0.4%. The market was only expecting 0.1% rise. And the core PPI rose 0.4% as well, with the estimate at 0.2%. So we did see a little bit of pickup in terms of inflation at the producer level. We have the consumer inflation number coming out tomorrow. CPI will be out tomorrow. So TNX, the 10-year Treasury yield, I always like to see anytime the market starts to anticipate the possibility of inflation, normally you will see a reaction in the bond market with the selling taking place there with the yield rising. But that is not really the case so far. We did get up to about 241 earlier today on the yield, but we're kind of sitting in this range where we've been the past few days. But I guess maybe for me, the biggest takeaway is that short term, we had a downtrend in play here on the yield, and we have broken out above that to the upside. I find that to be very bearish for the bond market and bullish for equities. But so far this week, we haven't really seen that translate. Yesterday, we had the equity markets gap down at the open and then battle back all day long, finishing with small gains, except I think the Russell 2000 managed to finish with a fractional loss yesterday. And the same thing kind of is happening today. We started lower, we're rallying back, but the small caps are having the problem trying to recover. And if we pull up the Russell 2000, and I think on the longer chart, it shows it better. But this was an index that took off over about a 6 or 7 week period from mid-August through the end of September into early October. And, I think I did a Fibonacci chart here, and I can, for anybody who didn't see that, let me go ahead and pull this up. I'm going to annotate and just show you using that Fibonacci retracement tool. Normally, you got that 38.2% level and then also the 50% level. Those are two key zones that you want to watch on these pullbacks. And notice that the first Fibonacci level, 38.2%, is at 1450, which is exactly where our prior high was before we broke out. So you got price support and that initial Fibonacci retracement level almost right there connecting at about 1450. And if we get out of this and move back to the weekly chart, you'll see something very similar on the weekly chart. Let's do it this way. And we'll just go back a couple years. We don't really need a long history. What I want to show you is just that 50-week moving average. But here, as we broke out, you can see we came off a 50-week test, pretty close to a center line test on the weekly MACD. And then we took off, broke out, and momentum started to accelerate. Normally, the rising 20-week moving average offers up support. And that right now is at 1452. So all of that 1450 area, I think, is pretty big. So I don't really think technically too much about the Russell 2000, even though it's been lagging here this week and continues to underperform today. I'm not too upset. I think this 1450 area is going to be the first key level that we need to watch on the Russell 2000. A couple of stocks in the news. As Aaron mentioned, GE, just an absolute disaster. Just an ongoing real-time disaster taking place. You can see that after the announcement, we did get up close to testing that declining 20-day moving average, and we have been just moving straight down. Hardly any buying whatsoever. You can see we closed near the low of the day yesterday with a very long filled red candle, which tells you that you closed way below the open. And look at the volume on that move. I mean, there's no sugarcoating this. This is just a flat out distribution period right now on GE. Everyone seems to want to get out. That's continuing today. Very heavy volume once again, 150 million shares already. We're not even halfway point of the day. So we may challenge yesterday's massive volume. And once again, big filled candle right now. 1772 is the last price. 1770 was the low earlier. So we're almost sitting on the low right now. Just not good news here. And the big problem is that in addition to all the technical sellers that we've had during this downtrend, now you've got all the income investors who all of a sudden see that 5% yield dropping to 2.5%, and they want out as well. They want to move into something that's going to generate higher yields for them. So GE just doesn't have any technical or fundamental leg to stand on right now. And it's going to be interesting, I guess, just to kind of watch to see where it finally does find its support level.
We did have somebody ask if you would short GE right now. I'll tell you my answer after I get yours.
Yeah, my answer is no, 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 no. I don't short anything in a bull market. So GE, the fact that it's struggling just tells me to stay away. I mean, I'm just not interested in trading it. The other thing is look at the RSI. RSI now down at 18, and you've got Stochastic at 13. Stochastic, after another day or two of this, is going to be down at 0 because you look at the last 3 days relative to the last 14-day range. So it's just a mathematical formula, but you're going to watch the Stochastic here over the next couple of days drop down well into the single digits, maybe close to 0. That's not when you want to be shorting after the stock has been hammered as much as it has. Doesn't mean it can't go lower. I just think you're taking a huge risk. I mean, you could get just a quick bounce back. Some bottom fishers come in. You might see $1.50 move back to the upside. So I don't know. What are your thoughts, Aaron?
Too risky. Forget it.
Yeah.
Yeah, I mean, that's just basically whether, and I agree with you. If you're in a strong bull market, don't be looking for shorting opportunities because there are plenty of buying opportunities out there in a bull market. So
No doubt. And there's some other stocks in the news. I'm going to get into some of that later. I think I'd like to bring in our guest, Grayson Rose. It has been a while, Grayson, but welcome to the show.
Thank you, Tom. Yeah, I'm excited to be here. It has been a while. I was thinking about that actually this morning as I was driving to work. I was like, wow, I can't remember the last time I was on a show with Tom. It's been so long. I
Yeah, for
miss it.
those. Well, I was just going to say, for those of you who maybe didn't follow some of the old webinars that we used to do, Grayson used to host my webinars for me.
I did. It was quite the party back then.
It's still a party, Grayson.
Yeah,
only
but
now I'm here.
It's terrible. I'm being left out.
Yeah, they put you back to work, but we're still partying.
I know. Yeah, you guys are having all the fun.
That's all right. You get to have fun with us today.
Yeah. So I am going to join you guys today to talk about a couple stock charts things. So I'm going to go ahead and share my screen.
Do it.
So what I was going to talk about today is actually the dashboard. The members dashboard is sort of one of the, I like to call it the heart and soul of your stock charts account. It's also sort of the launch pad for your stock charts account. And this is a page that you only see if you're a member. So some of our free viewers might be looking at this page saying, what the heck is that? What's going on? Now, you guys have showcased this page a lot. I mean, you guys use it, obviously, in your own navigating the site and everything. This is the first page that you come to when you log in. There's actually a lot of sort of hidden features of this page that I know of because I helped develop it. But I think a lot of people actually miss some of the core features of this page. So we're going to run through it really quick. There is so much on this page that we're going to sort of do a whirlwind tour. But I think it'll be helpful for you guys. So one of the things to mention... let's see. How do I get over there? There we go. So one of the things to mention is actually we have these nav buttons up here at the top for chart lists, scans, and alerts. Now, these jump you right down the page if you want sort of a quick jump to your chart list, which is a really common place that people go to. You can click that button and you jump right down to your chart lists. So a lot of people ignore those buttons up at the top, but if you're coming to the dashboard and you just want to get straight to your chart lists, you don't have to worry about scrolling down. You can actually just go over here, click that button, and scroll right down the page. So the other thing in this row is we have this gears toggle. Now, the gears toggle is sort of the preferences panel, launches the preferences panel for this page. So if I click this gears icon, you can see that I have these two buttons checked here for additional data panels and scans and alerts. These can be unchecked and you can update the page, but I've configured this actually. I've configured my dashboard to be sort of exactly what I want with the setup that's exactly what I want. So I'm going to run through that really quick. All of those settings are saved in a cookie in your browser. So every time I quit Chrome and I open the internet back up a couple hours later, these settings are all there still. They're saved. So what they do is they give you this additional row of data panels that you can see here with market movers, technical rankings, and predefined alerts. I've actually configured this row to be exactly what I want to look at. So when I come to the dashboard every morning, I've got the mini chart of what's happening in the market. That gives me sort of a quick overview of what's happening. I've set up this top panel to be the top 10 most active stocks in the Dow, because one of the things that I want to know is what's moving the Dow this morning. So obviously you can see GE here. I mean, you guys were just talking about that a second ago. But by the way, I got to sort of add to the party here. Don't touch GE. Please, no one touch GE. Don't short it. Don't touch it. Just stay away. It's an interesting chart. Just stay away. Anyways, I want to see what's moving the Dow. So I've got this panel configured to be the top 10 of the Dow and the most active tab. You can also see most percentage up, percentage down. So you can sort of click through this and see what's happening in the Dow. Now, the next panel that I've configured is the market movers panel for the S&P 500. So same concept. I want to see what's moving the S&P 500. So I've got most active stocks, percentage up, percentage down. I can flip through these and see what's moving the S&P 500. I can also jump to a bunch of different indexes. So if you want to see maybe London, maybe you're based out of the UK, you want to see what's happening in London, you can do the same thing. You can configure this to show you what's happening in London. Over here, yeah.
Now, if you configure this on your computer, let's say you're at work, so somebody's using this and they're at work and they configure it, it's going to be saved on that computer. But if they go home and then pull up their account on their laptop, they're going to have to reset it up, correct?
Right. So this is actually saved using a cookie in your browser. So if you're switching browsers or switching computers, or you're going from your phone to your laptop to your tablet, you're going to have to set it up in the different devices or the different browsers that you're using. But it is saved in every browser. So for me, I mean, I don't really use anything but Chrome. So for me, this is always set up. It's totally ready to go. So it's always there. So this setup that I have here with the top 10 of the Dow, top 10 of the S&P 500, I have the scooters. Actually, what's sort of moving, what's leading the large cap scooters group, and predefined alerts. This is always there for me every morning. So and every day and every night. It's always there every time that I pull up this page. So it gives me sort of a quick overview of what I'm interested in seeing in the market. Just sort of the quick view of the action. The other thing to mention here, actually, in the top part of the page, is this control center. So this is a scrollable list. And basically what this allows you to do is jump to any of our tools and resources throughout the site. So from this panel, I can get to everything I need, whether I'm looking at advanced scans, pulling up some alerts. Maybe I'm checking out what's happening on the public chart lists. I'm pulling up the different tools, seasonality and candle glance. Or I'm jumping down into the major sort of summary pages. Sector summary is a huge one for me. That's something that I use a lot. Predefined alerts. I mean, this list goes on and on. But
you said that just for me. You said that just for me, didn't you? You that
I did. I know that put a smile on your face. So really, any tool that you sort of need to access quickly is right in this scrollable list from the top left corner of the dashboard. So that's why I say it's sort of a launch pad. It really gives me the chance to jump right to any tool that I need. Down below there, we have the scans and alerts panels. So this allows you to access all of your saved scans, your custom alerts. Here you can see I've set up a bunch of alerts for actually sort of scooter crossing points that I think are important: 85, 80, 90, and 98. So I can jump right to all of that, see sort of a summary of that. And then I've got, of course, my chart lists. So I've set up all of my chart lists in a very specific order. I can jump right to any view for this chart list. So if I want to sort of look at what I call my target watch list, if I want to look at a candle glance view of the stocks that I'm sort of watching really closely, I can jump right to that in sort of the custom chart list views.
All those charts are trending higher.
Yeah, looks like
that's why they're on my watch list. Come on. So the dashboard really sort of serves, like I said, as the launch pad, or sort of the heart and soul of your account. It allows you to really jump to everything that you need on the site. But not only that, we're consistently making additions and improvements to this page, and sort of making it allowing it to provide more information for you right off the bat. So that sort of actually brings me to my next point, which is that we are launching a very exciting new feature of this page later today. That feature is going to allow you, it's going to be sort of another row here when you launch the preferences toggle. There's going to be another option here that you can turn on, and it's going to launch a row that's got two panels in it. Now, those panels will allow you to view a sort of quick summary of any chart list that you want. So for me, like I was talking about my chart list here, there are sort of two chart lists that are really important for me. I've got my target watch list, which is sort of the stocks that I'm keeping an eye on. And then I've got sort of my different portfolio lists. And when I come to the dashboard every day, what I want to know is what's happening in the market and what's happening in the lists that I care about, my watch list and my portfolio lists. So with this new feature that we're launching on the dashboard, you're actually going to be able to see a summary of those lists, sort of the favorite list that you have right from the dashboard. So I think I'm actually going to need to come back on the show and show off that feature. It's a really, really powerful, cool feature that we've been playing around with, and we're really excited to launch that this week. So keep an eye out for that, and maybe I'll be back on pretty soon to talk about that one.
Sounds good. Very exciting.
Yeah, so lots of exciting features here on the dashboard. I want to make sure that everyone is totally aware of it. Again, all of these preference toggles sort of launch important things here. You can choose actually your default view for chart lists. You can create new scans and new alerts from one click. Lots of exciting stuff. So another feature, actually, I'll mention this really quickly. Another feature that we are adding to this page is something that we have on our sector summary page. Tom, I think you're aware of this. On the sector summary page, when you hover over one of these symbols, you actually get a mini chart of that stock, or in this case, that ETF. So on the dashboard, what we have here, like I've configured my sort of market movers panels. Every time you hover over this symbol, you're going to get a mini chart of that stock. So, if you're wondering what's happening in GE, you want to see a quick view of why it's down so much, you can actually hover over that and see a little mini chart of it. So we're launching that in addition to the new sort of specific chart list views later in the day, actually. So this is a big week for us. We're doing some exciting stuff.
Very cool.
Yeah.
Now, I hate to do this to you, Grayson, because you're showing us all this great stuff, but of course we have people in the chat room going, well, what about this? Well, what about that? I think the one that's kind of a big thing is getting an annotate button at the top of the workbench, on top of your chart.
That is.
I know you'd like that too, because I
would like that. I would like that too. Yeah. We've got some sort of on that topic. I mean, we've got some exciting plans for the workbench. Obviously, everyone has seen the changes that we've been rolling out across the site this year. We've been sort of really keeping our foot on the gas pedal, launching a lot of exciting changes across the site. So one of the remaining pages that we have to do is the workbench. And we've been doing a lot of exciting work behind the scenes, and that work is going to continue. So keep an eye out for some pretty cool stuff happening, I think, in 2018. We're going to be bringing you some cool new stuff on the workbench.
Very cool. I do have to say, though, that we've been whining. We whined to Bill last week about the annotate button, so we thought we would whine to you as well.
Yeah, that's fair. That's fair. You can keep.
Hey, it's the people in the chat room. I mean, I didn't bring it up. They did.
No, it's a good one, and we love those suggestions. So, I mean, I got to say, keep them coming. Anytime you get an opportunity, tell us, things that you would love to see, and write to us. We love your feedback. We love hearing from our users, and we value that information. So speaking of 2018, before I head out of here, I got to mention something that's exciting. ChartCon, it's coming back. Now, I know that you guys are getting excited. Tom and Aaron, you guys are looking forward to a great event. We did ChartCon last time in 2016. We're going to be bringing it back in 2018. We've got some absolutely fantastic plans for it. It will be broadcast online, just like in 2016. So actually, the format that you guys are using to watch this show today is going to be a similar format to what we have for ChartCon. So fantastic stuff coming. We did a brief newsletter announcement in the last Chart Watchers newsletter. If you're not a member of Chart Watchers, definitely sign up. Or a subscriber. It's totally free to sign up. You can sign up really at the bottom of any of our pages. If you go to this sort of box right here, you can sign up for Chart Watchers. Like I said, totally free. Keep up with all the things happening around stock charts, and you get expert technical commentary delivered right to your inbox. So definitely something to keep an eye out for. But ChartCon is going to be coming back. We've got some fantastic plans. And this year, in addition to watching it online, excuse me, you can actually join us in person at the conference. So we've got this page here. We're going to be publishing a lot more information about this as we get closer. Registration actually for ChartCon itself is not open until the beginning of 2018. But we did send out an invite in our Chart Watchers newsletter to join us in person. So if you want to come out to Seattle, you want to sit in the room, shake Tom's hand, give Aaron a hug, we've got all those opportunities for you if you want to join us in person. We've got 2 packages, actually. So the exciting thing that we're going to be doing is after the conference, we're going to be boarding a boat and actually setting sail up to Alaska with all of our commentators, sort of the conference party continuing there. And if you want to join us on that cruise, you are more than welcome. We're going to be doing some special events on the boat, lots of sort of tutorials, a one-on-one with Chip Anderson, who is the president of StockCharts.com. He'll help you get your account set up, and lots of opportunities to talk to the commentators and really sort of engage with them on a level that the normal ChartCon experience doesn't allow. So if you're interested in coming to ChartCon, actually joining us in the room, we're going to be in Seattle, and then we're going to be, like I said, getting on a boat, heading up to Alaska, big cruise ship. We have that opportunity available. We'll give you lots more information as we get closer to this, but definitely get in touch with us, email our support team, or go back and check out the last edition of the Chart Watchers newsletter for some information on that, and keep an eye out for other announcements coming.
There seems to be something missing here, Grayson.
What's that?
Where's the part that says the cruise first stops at Pebble Beach? Is that here somewhere?
Yeah, there's no golf on the boat, Tom. So you can bring your clubs, but I don't know. The captain might get pissed at you if you're hitting golf balls off the front of the boat.
There we go.
Yeah, it should be great. And I have to say, you know, the special guests we had at 2016 ChartCon, I mean, we had a great time with everybody. And I know a few of you stalk our chat room now and then, so you could certainly say that, yes, you had a great time. It was really fun.
Yeah.
This is going to be great, though.
As far as prices go, joining us at ChartCon is a little bit more pricey. Well, a lot more pricey than actually attending the conference. The conference itself is a very affordable number. We're still putting the final sort of details on that. So like I said, keep an eye out for more information. But if you do want to join us in person, we've got that opportunity. I think it's going to be just really a once in a lifetime type of deal, especially with this cruise that we're doing. So awesome. Yeah, keep an eye out.
Yep. Very excited. Can't wait. And let's also mention that the weather out there in Seattle in August is absolutely phenomenal. I mean, normally, you know, people think about Seattle rainy and all, but July, August, you get hardly any rain. It's actually beautiful.
It's absolutely beautiful in the summer here. I mean, we really we pay for it. You know, the winters are a little more brutal, but the summers are just, there's no place better. It's truly one of the, I think, the best places in the U.S. to spend a summer. So yeah. We hope that you all join us. We got some exciting stuff planned for you, so we'll see you there.
All right. Appreciate it. Thanks for stopping by, Grayson. Look forward to hearing from you next week on some of
definitely
announcements.
Definitely. Take care, guys.
Cool.
All righty.
Well, there he goes. That was pretty exciting news. You know, I think the fact that we call this thing the membership dash or the member dashboard, I think is very fitting, because when you get in, it's almost like you're getting into a really nice car, you know, and you got all the controls right there at your fingertips, and you know, you really can navigate around stock charts from this dashboard pretty easily. So powerful.
Absolutely. Yeah, I absolutely loved it when they rolled this out, because it just makes everything right there. When I click into stock charts, I'm not having to sort of navigate before I get to what I want. So I love that.
Yeah, I love watching Grayson pull up his portfolio there on Candle Glance.
Yeah, I don't know. I mean, I have a feeling people are going to turn it back and then pause it and be writing all those down.
Well, I think it just goes to show, though, you know, that what he's doing in targeting some of these companies and watching them, you know, when I looked at those charts, a lot of them look pretty similar, you know, where all these stocks are uptrending, and being able to keep a chart list. And I've said this many times, I think that's one of my favorite features here. I know scanning is a big thing, but also being able to maintain a chart list and annotate those charts and what you're looking for, and being able to stalk these companies, waiting, and being able to set up price alerts and so forth on those particular stocks. It's pretty impressive and very, very powerful, and can make big differences in your trading results as you go forward. But anyhow, I know we're getting into another market update, so I'll let you go ahead and take over and update everyone.
All right. And away we go. Okay. And here is that member dashboard there. I did want to point out one thing that I only just discovered, I have to say. But if you click your chart list right here, it takes you right down to the ones you want to look at. So I usually was scrolling every time, as you probably have seen me do. So anyway, all right. Our second market update. I'm going to take us over to the Candle Glance very quickly. And here we go. Looks like the markets are trying to recover here. You know, we had a really rough morning, very similar trading action that like we had yesterday, and the market's trying to take back some of those losses. You can see Russell 2000, however, is still in decline, still creating intraday lows at this point. Small caps having a really tough time right now. And we can see Treasury yields are down somewhat at 23.81. Dollar gap down. It does seem to be consolidating slightly, but it is in a declining trend at this point. And we can see commodities hit hard early in the morning, but now at lunchtime, it does seem to be oil is coming back up, but we're still looking at 11.15 for USO. Gold is up slightly, GLD reading at 121.49. The VIX is mostly unchanged, but we are sitting at 11.55, which it's higher than what we've seen recently, but let's face it, those are still very low readings. Decliners leading advances. I'm going to take us very quickly over here to our market summary, which you can get to right there. Again, I find these new buttons all the time. And I'm going to sort this by percent change, and that way we can see which indexes are suffering the most. And we can see Russell 2000 right there at the top, NASDAQ 100 following. Dow Utilities and Composite, those are actually up at this point. So we can see as far as sector spiders, energy definitely taking it on the chin this morning. But look at that utilities ETF. It's now up over 1%. I'm going to take a quick peek at that particular ETF so we can see that nice breakout and the continuing rising trend that is going on here. Look at the PMO got its buy signal way back here, mid-October. Good call on that PMO. Nice clean crossover. We're now getting a little bit overbought here, but typically 1.5 to minus 1.5 would be considered the regular or normal range for the PMO. So we still have some more room for it to move higher without getting very overbought. And then we can see that Scooter has moved into the hot zone. So utilities certainly looking better than they have. And a quick weekly look at the utility sector. And you can see really since the end of 2016, it's not been a bad sector to be a part of. So, and that's all I have for our second market update.
All right, sounds good. Got a couple of things I want to go over before we get into some of our momentum sleepers. Let me go ahead and show you. I'm going to go into that sector summary as well and just give you a quick look at a couple of things here. First of all, you can see utilities, consumer staples leading today. So you got a couple defensive groups leading the market today. And if we look over the last week, you'll see consumer staples and utilities are the two big winners over the course of the last week. But also think about what the stock market's doing. I don't like to see defense lead the market as we go higher and break out. Those are not the areas where I want to see new money rotating into. But as we consolidate, it's not unusual at all for some of the aggressive areas of the market to take a break and to see some of that money rotate over into the defensive areas. That actually keeps our major indices like the S&P 500, the Dow, well, more so the S&P 500, keeps it above key technical levels like the rising 20-day moving average, the 50-day, and so forth. So I don't mind in the short term seeing this rotation. And the reason I point this out is we do talk about one of the warning signs that you have to watch for is this rotation from aggressive areas of the market to defense. So while we're seeing it in the short term, I'm really not concerned at this point. If we go back and we look, say, at a month or even further, 3 months, you're going to see technology actually leading. Then you've got consumer discretionary. Consumer staples are actually down further on the list. And probably the further we go back, the more it will lean toward the aggressive. You can see utilities dropping there, consumer staples over the last 3 months, still the weakest group. So we're getting a little bounce in the consumer staples area, which isn't a bad thing. Like I said, when we're seeing some of the weakness that we're seeing in the short term in some of the aggressive areas, like the industrials, like the financials, both of those groups have had negative divergences show up on their daily charts. So I'm not concerned by them underperforming here in the near term. In fact, I kind of like the fact that they're underperforming. So I wanted to mention that. There were a couple other stocks in the news today that I wanted to get to. Home Depot came out. They blew out earnings expectations. They raised guidance for 2018. And surprisingly, the stock actually opened down a little bit. But now you can see this really nice hollow candle and the volume picking up. I think there's accumulation taking place in Home Depot. I think this one looks good. TJX. This is TJX Companies. Another gap down. You can see overall we've kind of been going lower, and then we got another move to the downside as they missed their revenue estimates. They did come in with their earnings per share, I think, of $1, which hit estimates right on the button, but they did miss on the revenue side. And so the market's punishing them a little bit as they go down and challenge the July low. DKS, which is Dick's Sporting Goods, they had another disappointment. They actually beat top line and bottom line. So if you saw the headline news, you might wonder why this stock is down more than 5% today. But they did lower their guidance again going forward. So they disappointed with their guidance, even though they beat. And this is why I just don't like messing with a company that's in a downtrend. I mean, you can see back in May with earnings, they gapped down. August with earnings, gap down. And now today, again, gapping down. Although the one difference is that we haven't taken out the recent lows. So maybe some of the selling is beginning to slow here on Dick's Sporting Goods. But still, it's one of the weaker stocks out there, and I personally would avoid it. Advanced Auto Parts reported earnings, and this is always this type of thing really kind of interests me because you can see the stock has continued going lower, and even heading into their earnings report, the stock was moving lower, albeit on lighter volume. You can see that the volume on the recent selling had really dried up. So maybe that was one indication things were about to turn, but we really didn't see much anticipation of the kind of earnings that they gave today. They beat top line, they beat bottom line, really a kind of a shocker for Wall Street. And this type of a candle with the volume building today, this is to me like a breakaway gap where you've got a downtrend in place and then all of a sudden out of nowhere, Wall Street is shocked by good news. And so I'm actually looking for this potentially to be the start of an uptrend on Advanced Auto Parts. There's a lot of work still to be done. You can see these recent tops coincide with the low over here. So I'm going to say right around 100, 101, maybe 102. That area is going to be big resistance. We got up to 102 and change earlier today, and now we're back down below 100. So it's going to be worth watching. But I think that this is a very significant game-changing type candle so far on Advanced Auto Parts. Now, if we see a sell-off the rest of the day and we go back down and close at 90, I'm not going to be particularly excited about it. But so far with the heavy volume, we're seeing a lot of buyers step up. And so we could very well be seeing a bottom put in on Advanced Auto Parts. One last stock that I wanted to mention with earnings is KLIC, not KLAC, which is KLA 10 core. This is a much smaller semiconductor. Kulik and Sofa. Sideways consolidation. This company just blew out earnings. Another one of the semiconductors. Earnings per share was 51 cents. Market was expecting 37. Revenues, 215 million. Market was looking for 208. And we're getting a very strong breakout on massive volume. So this is one that definitely will go into my strong earnings chart list. I wouldn't be a buyer here. I would simply wait and let's see how it trades next few days. Maybe we'll get a pullback to a key support level, could be the top of gap support. Somewhere down the road could be a 20-day test. But this is the type of stock that interests me for down the road. It may become a trade of mine, in a few weeks or maybe even a month or two. I'll definitely put it into my chart list.
Well, there you go.
All right. And with that, I know we want to do some momentum sleepers. So why don't you take the screen and go over.
Yeah, I went ahead and did a scan of mine. It's not the one I always do, and I just decided to try it out again to find some of these momentum sleepers. But it basically looks for stocks that have their 20-day EMA above their 50 and the 50 above the 200, and just having recently had a PMO crossover. So I just decided to take a peek at it. I ended up with like 40 stocks, 48, and I pared it down to this before the show. So I'll give you a quick rundown on the ones that I saw, but I think there's some pretty interesting stocks in here. So the first one I have is Paramount Group. I like the cup. The reason I picked it as a momentum sleeper is you can see that the PMO bottoms have been rising. You can see that the tops have been rising, even though the tops were pretty much flat. So that tells you that there's some momentum building there. As it comes out of this cup. And then look at those EMAs. They came very close to negative crossovers, but managed to get price right back above all three of them, four of them actually, if you count the 5-day EMA. So I thought that one was interesting. And of course, overhead resistance, I wouldn't look for that until 1660. So that could be an interesting play. Let's go to our next one. I have... And this is the Power Shares high dividend, low volatility portfolio. And actually, there's a sister ETF here, another Power Shares that came up, but I like the setup on this one better, so I decided to pull this one. What I found on a lot of these, and you're going to see when I talk about chart patterns, But I thought it was very interesting that a lot of these momentum sleepers had ascending triangles as the pattern, and a lot of them are getting ready to break out. And that's why we wanted to bring them to your attention. So we can see that the scooter has been rising. And again, we just got a PMO buy signal. And again, I love to see these PMO bottoms going in line with the PMO bottoms and tops as well with price. So nice. The next one I have for you is Synopsys. And again, we've got sort of that ascending triangle pattern. I'll explain. It's very interesting when you go through sort of the psychology that's behind the formation of some of these patterns, and I will talk about that a bit. But hitting that overhead resistance, but building up those bottoms higher and higher. I mean, that tells you momentum is building, and we're ready for that breakout. So the PMO right now is about even, but again, you can see it's rising tops and bottoms. So I thought that one was interesting. Look at the scooters sitting in the hot zone. The next one I have, and the last, is Universal Insurance Holdings. I thought this one was interesting because I saw a short-term flag here after this breakout above the resistance level at 25. And you can see the last was 25. We're still kind of flirting with, not managing to close above that, but I think that would be interesting to see that a close above 25, but you get a breakout from that flag, and the expectation would be a trip from $1, $2, $2.50 from there. So you're looking at adding up to about 28 here. I would say right around what you're looking at as far as overhead resistance back here from early 2017. So I thought that one was interesting. And that pretty much was all of the momentum sleepers that I had. I know we still have a couple more minutes before the 10 and 10 to 1, which we might actually start on time today. So practice makes perfect. Doing this every day, I think we're getting better and better at that.
Yeah, I've got a couple of stocks I'll show real quick. And I'm taking a little different approach from a momentum sleeper standpoint. I mean, this is first is a company, IBM, that if you recall, just a few weeks ago had a massive gap up on really a lot of very heavy volume, and gave the appearance of some accumulation taking place. Since then, we've seen IBM disappoint. And because IBM has been such a laggard for so long, probably a bunch of folks who jumped in on this gap up are giving up on IBM. But I actually think it's worked its way all the way back down to the 50-day moving average. Today, it looks like it's trying to put in a reversing candle. It's going to be interesting to see. But if you annotate the chart and bring up the auto support resistance line, you're going to see that the prior low back in May, we gapped below on heavy volume, and then we came back up. We struggled to get through this area right around 147. Today's low is at 147.49, off of the recent high above 160. So this has been pulling back for quite some time. I think we also could draw a trend line here on the recent lows that IBM seems to have maybe put in a bottom. But if you come across here, you'll see that we're pretty close to this trend line as well. So you've got price support, trend line, and then if we wanted to put one more line in here would be gap support, where it actually gapped up from before earnings. And it just seems to me like 145 to about 147 is really important support on IBM. So I don't know if you want to call this necessarily a momentum sleeper, but it had a lot of momentum with a lot of volume just a few weeks ago. And now here we are, and it seemed to be almost a forgotten stock. I wouldn't be surprised if we get a reversing candle if this one doesn't start making its way back up toward 160. We'll just have to see. Now, if it breaks down below 145, and especially if that volume's heavy, I personally would be a little afraid of it. And then the other one that I'm going to mention, you might look at this one and say, wow, this is no momentum sleeper. It's got not a bearish momentum. Tesla has been struggling for quite a while. The reason I bring this one up is if you look at the longer term weekly chart, and, I know there are folks out there that like to look at the market from a longer term perspective and not so much what's happening today or the last few weeks or couple months. If you look at the longer term chart on Tesla, and I'm going to move it to a 4-year chart instead of 5, because this huge move up really kind of distorts some of what I wanted to look at in terms of the price action. But if we look at just the last 4 years, you'll see that Tesla went sideways for a while, and then look at the volume really pick up or the momentum really pick up on increasing volume as it broke out above 280. And so if I annotate Tesla, and I had Tesla for a while short term, but I got out of it. I had to take a loss. But it seems to be working its way down first to the 50-week moving average, and check out the weekly MACD making its first test, or approaching its first test of the center line since back at the beginning of the year. So it seems like all of the momentum that this stock had in the first 6 months of the year kind of been unwinding a little bit. And now we're getting close to a really key support level in terms of price, along with that moving average as we approach the MACD center line. So anyway, I think Tesla looks kind of interesting from a longer term perspective. I'm going to say that it holds 280 longer term. So as we get down the low threes, it was just up 375, 380 not that long ago. I think this one could be a sleeper. So that's what I had. So I'm going to go ahead and get ready for the 10 and 10.
All right, perfect. And yes, we do have quite a bit to look at. But we did say that we would start with SM in energy, and it looks like you did get a head start. So
I cheated. Every once in a while I cheat. So anyhow, SM is, I still like this chart. I like energy. think energy broke out. I mean, we could take a look at the XLE and crude oil prices. Crude oil is down 55 something per barrel, down over 2% today. So that's a little bit of a drag in terms of energy performance, energy shares. And so we're seeing some weakness. I can just tell you, when you look at a chart like this, SM Energy had been downtrending for quite some time. And check out the RSI while it was downtrending. It never got above 60. But once it changes its character and it starts to move up and breaks that downtrend and starts to trend higher, notice now the RSI has moved a couple of times over 70. And now, if you're considering this to be an uptrend, you should be looking at RSI 40 as support instead of seeing it get to oversold levels like we saw during the downtrend. Normally, in an uptrending stock, your RSI 40 level becomes pretty good support. So I think as SM moves back down closer and closer to this support level, and its RSI moves down closer and closer to that 40 area, I think SM becomes more and more of a buy. I actually like the reward to risk to this one.
All right. Well, since we are looking kind of in that energy sector, a couple of people, I always like it when you guys say, I second that. So just so you know, if you all agree on a symbol that you want to have seen, that does help get it to the top. So if you all want to see a particular one, but ConocoPhillips, COP, interesting looking.
Yeah, this is another one. It does have a negative divergence, and it's failing so far to hold the 20. I'd like to see it recover today. If it doesn't, then I think we could see a test of price support. But that price support coming in, you can see multiple tops. I'm going to say right about that level. It looks like 50 on the way up was a big challenge. We finally got up. Volume picked up a little bit as we went through 50. And now we're coming back down. The two key support levels that I would be looking at would be 52, which is where that 20-day moving average is, actually 51.79, and then price support at 50. You do, on the most recent high, have a higher price, lower MACD, and you got that black candle right on the top, which is a reversing candle, and we have since been moving lower off of that. If we fail to hold the 20, I think we're going to get $50. So those are the two key areas. Now, if we reverse today and print, say, a hammer on that 20-day moving average, then I think we have a better than even chance that we're going to head back toward 54 first.
All right. Next one I have is for our Canadian friends, GSY.TO. Go easy.
All right, go easy. Well, you got to like that name. Okay. It's got first of all, not a whole lot of volume. So that would be one thing that would bother me a little bit. But it does have a nice trend line in play. So I think if you come back here, you connect these lows, you're going to see we got a nice little uptrend working, maybe even a channel. I think if you draw that. And the way I did that, by the way, on a Mac is when you get to the lower line, if you hit the command and the left clicker, I didn't do it that time. Let me see here, get back out of here. Command and see how I can draw. It's the same slope of the line. So that's how you can draw channels. But anyway, this one looks to me like it's in a really bullish channel. I would say for me, the big problem ahead is trying to get through the price resistance that was established back in April, up near 38, just above 38. So I wouldn't be surprised for this uptrend to continue until we get to that level, and then we'd have to reevaluate at that point.
All right. The next one I have for you is Immunogen. I know we look at that one fairly regularly, but IMGN. I'm seeing like maybe a really, really short term flag, possibly a double bottom that's executed. I don't know. What do you think?
This one's interesting because I like the fact that it's come back up through the 20-day moving average and had a slight positive divergence on that last low, which means maybe a 50-day test, and we're almost there. But a couple of the areas that I would have been looking, there was pretty good support at 540. So I would not have been too happy to see this breakdown. But look at that bullish engulfing candle come right back up through that level and now clear the 20-day. What I would be assuming is that we're going to go into a cup, some sort of a cup, or maybe off of this high could be an inverse head and shoulder, something that is bullish. That's what I'd be looking for, which means we got to get through this 50-day moving average. So the 50-day is going to be one level that I'm going to watch closely to see if we can get through. I think if we get through it and we have solid volume to confirm the move, I would be much more bullish on this chart. To the downside, I'd first be watching that 20-day moving average. And then second, that 540 level, which now has, we saw that head fake. I wouldn't want to be going back down below that level again. So those are a couple of the areas I'd be watching. The biotechs as a group, as I said yesterday, they're sending a lot of mixed signals right now. I expected a pullback. We've gotten a pullback, but it's on the verge of not being a very good pullback. It's starting to lose some short-term support level. So I'd be careful if we don't see a pretty quick move reversal back to the upside in the overall biotech group.
All right. Next one is in the financial space, ALLY.
Yeah, this company I know is on my strong earnings chart list. So I know they beat earnings expectations. And I actually am a fan of these financials on this pullback. I think the XLF, the financial ETF, is at a pretty interesting level at the 50-day moving average. So I would not be surprised to see this group start to move higher. And if that's the case, then I would expect to see stocks like ALLY perform well also. So let me just kind of draw this trend line right about there. And the big breakout recently, I would say with that candle with heavy volume, is about 25 level. So I think as long as this stock holds, say $24.70 to $25 in this range, I would be okay with it. I think the pullback that we've seen recently was on fairly light volume. So I'm assuming that this uptrend is going to continue. I like the financials. I think yields go higher, which should help the financials. And so I would be looking for a return here back up near $27 in the near term.
Okay. On the other side of the world here, Bitcoin Investment Trust, GBTC.
All right. Well, I tell you what, this is a tough one.
Yeah.
Only because we've had such a huge move. So the volatility, if you're going to get into this, you have to understand that you're going to have a lot of volatility. And so just be prepared for it. A couple of things that I would be watching here. Number one, clearly the high that was established back in August is a big number because you can see the selling that took place after that high was on pretty steep volume. And I don't like that huge red candle. We made our way all the way back up close and rolling over again. The last time we came down to about 500. That would be one. I would say that's a longer term level to watch. Maybe more recently, the move back down here to about 600 or a little above 600. But the last thing I would throw in here maybe is a trend line. And if you take a look at recently where this has been, and you kind of draw this trend line up here, I'm going to say right about there. It would suggest, if I can grab a hold of it there. All right, that's not working. I think if you grab a hold of that, though, move it up. There we go. So you got trend line support and maybe a breakout recently closer to 700. I'm showing you a lot of different levels because I think if you're going to get in, you need to decide which level you want to use as your stop in order to measure your reward to risk. Because to me, the reward is moving back up to this 1,000 level. Hopefully getting through. Volume did pick up on the last move to the upside, but there's no guarantees. So I'd have to be able to set this trade up so that the reward to risk makes sense. Right now, I don't know how I could do it unless you want to use that rising 20-day as your support level. So a lot of mixture, mixed feelings with this one. It's moved so much in 2017, though, and that's the part that really scares me, is that if there's a big move to the downside, it could come very, very swiftly. So just make sure that the risk, that you can, handle that kind of risk.
All right. Let's see. The next one I have for you is going to be, there we go, 7 NVCR.
All right, NVCR, Novacure. I think it's just sideways consolidating. So for me, after a beautiful uptrend, you can see right here that the target $22 is pretty clear. I think the recent low that was established down around 16 is pretty clear. So we had a beautiful move up, sideways consolidation. I think it'll resolve eventually to the upside, but I would still want to make sure I keep my stop in play down below $16.
Okay. The next one, we haven't looked at this one since the disaster. Equifax, EFX.
Yeah, I haven't looked at it in a while. I don't like it. I think it's stabilized after this huge drop on massive volume. We got that quick bounce to around the 20, and we've just been since going sideways. It's probably one of those things where it's not just one cockroach in the kitchen. Probably going to get some more, I don't know, bad news out of somewhere, which will most likely we'll lose this support level down around 105. It looks like we almost did that a couple of days ago. Today, we put a move up over 111. Now we're back down to 109. So there's a little bit of a range here that you could certainly look at. But I think the level that I would really be watching here is the recent lows that we've been printing down around 105, 106. If we see the volume pick up and a move down below 105, I think it's likely starting the next leg back down to 90.
Okay. Let's see. The next one I have for you is Western Digital, WDC.
Yeah, this is the one that I talked about recently. I liked the uptrend that was in play, and then the symmetrical triangle that followed. So when I was looking at this, here is clearly an uptrend all the way to the high. And then following that uptrend, what I look for is a continuation pattern. And I think if you take a look from the high and draw these lines, I don't know, I'm going to say probably right about there. And then this, you can see the rising lows and you can see the falling highs, which basically it's a symmetrical triangle. It's squeezing. So I look for this pattern to resolve to the upside, which it did right here on this candle. We've gone back down and it basically tested the breakout a couple of times, back tested. And today, actually, with volume starting to pick up, we're breaking out above these recent highs. I think Western Digital is going to make another move up to 94, 94 and a half, and eventually make that breakout there.
All right. Let's go ahead and finish with GIII, the clothing. I know that's.
Yep. Yeah, this one, this one kind of disappointed because it had some really good movement with the earnings. This is one that I had held for a while. I don't remember if I ended up getting out with money, making money or losing money, but I know I haven't had it in a while, and I don't like the way it had been performing, going down, bouncing, but failing at the 20-day, going down to a new low. At this point, though, I'll say that it looks like it has found support at that August low, and we're trying to get back up through the 20. So right now, the stock is squeezing to me. The MACD is turned up, so if it does come back down and maybe put some kind of a reversing candle at about $23, maybe goes below intraday, comes back down, comes back up and holds it, that could be a very significant bottom. But in the meantime, I think it's just squeezing between price support and that declining 20-day moving average, and we need to see which way breaks first and whether volume confirms that move.
All right. That is 10.
That's 10.
Yes. In almost 10 minutes. We did pretty good.
Yeah, we started a minute or two late because of me. But yeah, 10 and 13. I think everybody knows that's about normal.
Yes. I think that's works just great. And I do have time, it looks like, for our final market update. So
go right ahead.
All right. I'm going to take it away. All right. Let's start off again with that candle glance. I really like that. It has It's just visual. And of course, all of us here at Stock Charts and Technical Analysts, we're very visual people. So here we go. You could see that we were starting to make up for some of those early losses this morning, but it appears in the last 30 minutes or so since we had the last update, price is falling yet again. And the NASDAQ even is getting ready to set a new intraday low if it continues lower. And Russell 2000 is also still falling fast at this point. We're just not seeing any support there for the small caps at this point in time. And we can see that Treasury yields are moving lower and lower, but we're at 23.75 right now. UUP gap down and continuing lower, not looking too good. But in comparison, we can see, we got a tough gap down also on gold, but it really made a move back up. Kind of have a flag here, if you want to call it that. And now we're starting to see a breakout to the upside, which makes more sense when we see what's going on with the dollar. The VIX is standing at about 1192, which is higher than we have seen, but still not a very high reading. Declines leading advances. And let's go. We haven't looked at, I'll be showing the scooters, so we'll leave that out. But let's look very quickly at the most active for the S&P 500. And I'm going to use that candle glance again because it is very helpful to see. These are the big movers. This is what's going on as far as volume. And look at every single one except for Mattel is sitting and moving lower at this point. They're the most active, high volume, and all moving lower. So that's certainly not what you want to see, is all these large caps struggling at this point. Mattel, remember, we were looking at, I think, a discussion with Hasbro about merge or something like that. I can't remember exactly what. And so we've been seeing Mattel really have a great time. It's been in a long-term declining trend. And after these talks, we got that big gap up. You can see in the thumbnail very clearly on very high volume. And of course, the PMO was yanked really right back up, but it was already turning even before we got that gap up. So it was already giving us a sense that something good was going to happen. Notice that with the momentum on the PMO, you have rising bottoms. Yet here we were seeing declining bottoms, and that is a positive divergence. So really, even without knowing the news coming up, we did have a hint that we might see a change in this declining trend, just based on the momentum from the PMO. And that's all I have for our final market update.
All right. I think what I'll do is I'll go ahead and share a couple of the scooter movers and maybe just take a little different approach to it.
Mm-hmm.
And then you can kind of come back and give some of your scooter movers, some of the ones that you are following or that you like today. So what I'm going to do today, first of all, I just want to make sure everybody understands that the scooters it's an acronym for Stock Charts Technical Rank, SCTR. It is an exclusive feature here at Stock Charts, so you're not going to find this anywhere else. And it was developed by John Murphy. So I probably don't need to say anything else. It's certainly something that you want to keep in mind. It is weighted more toward the longer term. So, you pull back, I always look at it maybe as more of a tool that someone who's more of an intermediate to longer term trader would be interested in. I think you also can use it in the short term, especially as a confirmation for other things that you're seeing in a particular stock. But because of the way it's developed and because of the formula, 60% of it is based on longer term weightings, and 30% is more intermediate term, and only 10% is short term. So just keep that in mind, that this is a ranking system. And that's why when some of these stocks that have been moving higher for the last year or two, they go through a period of profit taking, they really don't lose much in terms of their scooter rank, because that long term, it still looks extremely bullish, even though the short term may start to roll over a little bit. So those of you who have a longer term time frame, I think really should be paying more attention to these scooters. Now, what I want to do today is just show you, for instance, if I knew I wanted to look at, say, mid caps and maybe technology names, maybe not the big technology names, that we're all used to hearing about, but maybe some of the more mid-size technology names. What you can do is go in here to the scooter reports, and then you can pull these up. And by the way, the ranking here from 99 for large cap stocks, the member dashboard, when you look at it on there, I'll just give you the top 10 or whatever. But if you want all of them, you can come right back in here, large cap stocks, and you have them all sorted from 99.9 all the way down. You can see some are healthcare stocks, various industries. You can kind of get an idea of where these stocks belong, what groups they belong to. But what I was thinking about doing is let's take a look at mid cap. And then let's take a look at the sector. And let's scroll down, because now it's going, some of these stocks aren't categorized there, as you can see, with sector and industry group, but just about all of them are, just a few that aren't. But anyway, I want to go down to technology. So we got a lot of these different pages. I'm going to do, I think it's like page 8 or something is where it starts. Yeah, right here. So here's technology, mid-cap stocks. Here are your industry groups coming down. And notice the scooter ranking is in order. So the top ranked mid-cap technology stock is Universal Display, OLED. And if you take a look at OLED, you can see that it is very overbought and it's been moving straight up. So from a short-term perspective, there's no way I want to jump in. But I also recognize that this is a stock that is performing extremely well. And so keeping this on a watch list of some sort, setting up a chart list for stocks to stalk, I think OLED would be a great stock to keep there. It's got great volume trends, made a huge move to the upside. But the problem is when you jump in, when a stock has these, big blue mountains, meaning that they're very overbought, you can get pretty frustrated in trying to trade a stock like that. So I'd have to see a little bit of a pullback, see this overbought condition unwind for a period of time, and then I would probably be more interested in this stock. But you can see quickly mid-cap technology stocks, how you can zero in on some of these stocks that maybe, we don't hear about every single day. Arista Networks, telecom equipment company. And again, you're going to see a very nice looking chart. Been in a solid uptrend. And what you're really going to note on most of these high scooter rank stocks is that your 50-day moving average and your 200-day moving average have a very wide difference. That is normally going to be associated with these high scooter stocks. But I could go down the list and pull up a number of these stocks. Let's see what else we have here. Actually, let's go down and look at some maybe that are closer to like 75 and just pull up a few of these real quick. Aqua America, that's a water stock, WTR. Now this one, you can see it's a little bit of a narrowing between the 50 and the 200, but still very, very solid company, continuing to uptrend. Maybe not quite as overbought as some of the stocks we just looked at. And you can see the bounces that have been taking place off of that rising 20-day moving average. So just going back sometimes and looking at these stocks, I think can help you become more experienced in what you want to look for on these pullbacks. Let's pull up one more, and then I will turn it over. Actually, that was I got down into utilities, but let's look at let's go up here to 75 for another technology company. LDOS, this is 73 on the scooter. I know this was a company that previously had reported some pretty good earnings. I think it was back here. It's continued to move up, but here's a problem with this stock. Notice the recent highs and look at the MACD right there. So you got a negative divergence. Volume maybe drying up a little bit, and now we're pulling back. We failed to hold the 20. Actually got some pretty good support around 61 and that 50-day moving average moving up from underneath. This was a stock that was 64 7 or 8 trading days ago, and now it's back down to around 61. And notice the RSI, which was overbought 7 days ago, is now down in the 40s. And when you look across at this uptrending stock and you look down at the RSI, anytime you get down into the 40s, you're either at or approaching a pretty significant low on LDOS. So I think that this move back down to the 50-day probably is going to get a reset. We're going to see that MACD back down at the center line. And I think LDOS with a reversing candle of some sort could look really interesting here. But I'm going to turn it back to you, Erin. And
Okay.
what do you want to take a look at with the scooters?
Well, what I thought I would do, and I hadn't thought I would do this until now, but I'm going to show you how to kind of create a really simple scan for scooters in an industry. So if you want to look for scooters that are above a certain level, you showed us one way to do it, but I'm going to show you another way if you wanted to have it as a regular scan, similar to what Grayson was doing. So let me go ahead and I'll take the screen because I don't think I have it yet. Here we go. And we don't even have scans in here for Market Watchers account. So we'll just go ahead and start with the easy scanning workbench. So, of course, it already sets it up. I would probably change this myself. I have it changed on my scans, but just for the sake of teaching right now. So first of all, let's see what sectors do I want to look at. I'm going to say the cyclicals. I'm interested in seeing what's going on. I want US, so I'm going to add that. So my group is cyclical. And now let's look at scooter values, scooter ranks. So what I want to look at is the scooter. And I'm going to go into, you looked at the mid caps. I'm going to actually go with the US ETF. So we'll run it through there. And right now it tells us if the scooter is above 90. So what I might add is putting in that, yesterday it was, less than 90. Well, it was, at a certain threshold, and you could add it. So right here, this is just an easy way. We're going to look at the cyclical sector, anything with, as far as, actually, we already said ETFs. Let's do, because we're talking about the cyclical sector. I'm not so sure that will work. So.
Yeah, you might not get many ETFs on.
Yes, exactly. Okay, so we'll add just the scooter being over 90. Check the syntax, of course, if in case you had a typo. Everything looks good. So I'm going to run the scan and let's see in the cyclical sector how many are above 90. And of course, I would also want to do it by ranking here by clicking on that column to organize it in that way. And so now looking at cyclicals, this will tell you all of the scooter numbers that are above 90. And one of the things that we don't talk about a lot with the scooters, but part of how you get that number, that ranking, is it's compared across its universe, for example. So, for example, the large cap universe. So it shows you not only what the value, it comes up with a value from that ranking, but it also then, the ranking part is amongst its peers. Where does it rank amongst its peers based on the value you get from the formulas that are, as you said, weighted more toward the intermediate and longer terms. I did have a question in here about, creating a short-term scooter. But, I don't think you really need to change the actual, how it's configured. I think you could still use it as a short-term confirmation, which is why I have it on all of my charts. So that's just an easy way to get to, a sector, scooters, or however. A lot of people are afraid of that scanning workbench. So I just wanted to show you it's not that hard. And we make it easier. And of course, you can always create your own language, etc. But we did say we would look at some of those movers, and I'm just going to take it right here from our nifty dashboard here. And you looked at mid caps. Let's go ahead. Actually, I'll go ahead and pull up those ETFs at this time. And we can see which ones are in the top 10. So which ones have those top scooter rankings as far as the US ETF universe. So relatively speaking, these are the ones that are near the top. So not only do you get an idea of how strong they are, but then how that reading compares amongst the peers. So I like to use it for relative strength. And I think you can use it short term for that. Just knowing where it ranks at that current time tells you, momentum. It tells you internal strength, but mainly I think it does tell you relative strength. And we do like to look at that as far as when we make these comparisons and look at investment opportunities. So that's your top 10, but which ones are moving the fastest today? We had a scooter rank change of 56 on EWZS. So you can just turn right here and we'll see, there it is. Look at that scooter move. We're not quite in that hot zone. So if we had done a scan, it wouldn't have shown up because it's not above 90. But, this is a way you can get to the big movers and see what's going on. Of course, I look at this, and even though we're getting that nice move in the scooter, you got a double top. It just executed. It's heading lower. It's just about hit its minimum downside target. So, there's some interesting support, but we'll have to see. But look at the PMO. So if I were looking at this and I thought, oh, we're hitting this interesting area of support, the PMO is not looking so good right now, but it is oversold. Maybe I want to keep an eye on this. I've seen, because it did show up on that list for scooter movers, let's keep it in my watch list. And, because we could be looking at a good area of support and a possibility of a turn, especially when you see amongst its peers, it's doing so well relatively as well. So internal strength, it's a little bit, I think you could make a case for it not being that internally strong when you look at a decline like this, 20, 50-day EMA, negative crossover. Yeah, I wouldn't touch it, but it is something that can be used in that way. So, and I think you also showed, and I've picked up on now as well. So we're going to go back here to scooters. There's our percent up. Well, let's go down here. I'm not sure what happened there, but we'll try over here. And so I'm going to look at the scooters US ETFs. Remember, we're going to do, I did top up. Let's do top down, who's really suffering. But this time we'll use it in a candle glance. And wow, well, that's an interesting looking picture, but we have some interesting US ETFs in that group. So let's go ahead and look at the small caps here and candle glance. And here we are. Again, these are the big scooter movers going to the downside. Well, not a big surprise. Look at every one of these charts, declining trends, bad days, a bad day. Makes sense that you're going to see that change. So it's just another way to find those, you showed them the report. There's ways to also come up with your lists and sort, as Tom showed you. But you could also, if it's something you want to look at every day, or have an alert for, you can set up a scan or add the scooter to your scans. I don't know that I have the scooter in some of I think I do in the regular, the one that the PMO scan to rule them all, which is linked at the bottom of the Market Watchers Live recap. Everybody asks me, and everybody already wants my scan that I showed earlier to give it some of those momentum sleepers. And honestly, it's not a rocket science scan. It's just 20 days of EMA is above the 50-day EMA, and the 50-day EMA is above the 200. So you're already in a nice bull market set up for that particular stock. And then I just set up who's had PMO crossovers. And that was pretty much it. And that's where I came up with about 48, 49 stocks and cut it down from there. Usually using candle glance, because you can use that handy dandy trash can if you want to get rid of whatever it is from your chart list or page, just right there. Hello?
Oh, are you there?
Okay.
You're still here. You're still with
still here. Everybody's still okay. So as far as the scooter report goes, I think we've shown them how to get a good report and look at the big movers. But I really am finding this to be very handy, the scooters and having the ability to have it, for example, just an RRG chart of, who's today, relatively speaking, who's having the biggest moves amongst their peers. And then, you can even pull up the RRG, which I love the RRGs. I need to know more about them, but I really like how they show you what's going on. Look at Mattel. Remember, it was in that lagging sector. If you recall, when we had Julius on the show, anytime you start seeing something move upward, basically between 0 and 90 degrees moves are the ones you want to see. That's where we're looking. And of course, you can see we've got that lagging. It's moved into the improving section. But again, all of these picked out simply from the scooter top up. What's going on right now? Who are the big movers? And, interesting to see some of these with the way they're weakening.
Yeah, the one cautionary word I would throw in there with Mattel, and I don't like to trade any stocks under, possibility of a merger or maybe talks of a merger, because the problem is a lot of times they just simply fall apart when the deal doesn't go through. And I'll just, I'll quickly show an example here of a recent discussion. Here is T-Mobile, which had moved considerably higher back in September when they were talking about their deal with Sprint. And if you pull up the Sprint chart, you'll see the same thing. Nice little move there in Sprint. And since then, they've basically said, okay, talks have fallen, off the table. And so all of those gains have been given back and then some. So I know a lot of times when you get into these rumors, the rumor mill about a stock being acquired, you can have these huge pops. But I've learned my lesson the hard way by putting money in, thinking, I was going to be wealthy and on an island in a year. Because of
on a golf course.
Yeah, exactly. On a really nice golf course. Because these deals, we're going to go through and there's going to be a bidding war and everything else. And then it falls apart. And you're sitting there, and you're left holding the bag. Mm-hmm. So I want to be really careful. I know that there's one company actually today that's in the news. Wall Street Journal reported that Roark Capital was going to be bidding for over $150 a share for Buffalo Wild Wings, which is WLD. And if we pull that chart up, take a look at the gap up today. So pretty big move to the upside, but I just don't know if I can trust it. I mean, maybe the deal goes through, maybe it doesn't. If it doesn't, I'm going to come right back down because we were pretty much in a downtrending stock, although we did get probably some pretty good earnings is what I'm guessing over there. But I just think you want to be careful. If I don't like trading, merger rumors and that sort of thing. I like things that are more concrete.
Mm-hmm. Well, it's sort of in that same vein where you don't like to hold into earnings, right?
Right. I mean, it's
the same idea.
Yeah, the whole thing can fall apart, and earnings certainly can. A chart can fall apart based on earnings as well. Mm-hmm. So yeah, that's just something I wanted to throw out there. Now there was also a question that had come in about why are utilities going up when the 10-year Treasury yield and financials, potentially are going up. The yield's been going up recently. And normally what we see is the XLU, the utilities ETF, going opposite. So I thought what I would do is just pull up a quick chart to answer the question, because I agree. I think right now it's kind of muddled. But if you pull up the XLU relative to the S&P 500, and then also down here under indicators and price, I can put the 10-year Treasury yield. And what I'm going to do is I'm going to put that 10-year Treasury yield, instead of being below, I'm going to put it behind the price. And I'm going to shade it pink just so you can really see it standing out. And then update this chart. And so normally what happens, this pink line is the 10-year Treasury yield. So you can see that as the Treasury yield was coming down March and April, notice utilities on a relative basis outperform the S&P 500. And then when this starts coming down, you can see that this line. So there appears to be an inverse relationship, and that kind of makes sense. Well, it does make sense to me, because a lot of folks get into utilities for their yield, and anytime the 10-year Treasury yield is moving up, then utility yields are not going to look as attractive. So folks start moving away from utilities, and they underperform the S&P 500. And so you can see in July and August, the yield was moving down. And of course, utilities just surged to the upside relative to the S&P. And then when we bottomed in the yield and the yield started moving up, you can see that until early October, utilities relative to the S&P were dropping. What's been happening recently, though, is that we're seeing the yield kind of moving up and utilities relative to the S&P 500 going up with it. I think it's a temporary thing. I don't look for this to be sustained. It just doesn't make sense to me. But, it's not inverse 100% of the time. There are going to be periods where the two kind of go hand in hand. So I would just say this. I think right now we're seeing money rotate away from some of the aggressive areas because of slowing momentum, overbought conditions. We're seeing energy pull back. We've seen financials and industrials pull back. And that money is not leaving the stock market. It's looking for other areas. And so we've seen a big bounce in consumer staples. We've seen a bounce here in utilities. I think that's what's going on in the short term. And I think longer term, we're going to see money rotate back into those aggressive areas. And when they do and yields continue moving up, I suspect that we're going to see utilities underperform. But it's speculation on my part, but maybe educated speculation.
Yeah, that was really interesting. I did see that question. And this is the kind of chart that really does show you that relationship is inverse. But, similar with the dollar and gold, they don't always track, inversely,
Right.
like you usually see. So, I mean, it's a similar situation.
Yeah, and likewise, if you pull up the XLF relative to the S&P 500 and compare that to the yield, normally when the yield's rising, that's great for financials, and financials will outperform the S&P 500. But when yields are falling, the exact opposite occurs. And if you notice with this chart, this tends to go more hand in hand with the direction of the yield.
Mm-hmm.
So if the yield's rising, if you really believe that the yield's going to continue to go up and the Fed's going to be raising rates, then you should have some of your portfolio in financials, because this is a group that definitely will benefit from higher interest rates. Now, recently, you can see this is on a relative basis, but even on an absolute basis, the financials showed slowing momentum on the most recent high. And so I'm not surprised that we've seen a little bit more extended selling in the financials, and the yield just simply has been kind of moving back, consolidating, basing as well. But further out, I expect that we'll see yields move up, and I expect to see financials outperform again. And as a result, I actually have a couple of them that I'm trading right now. I think I mentioned PNC, which I really like, because I do think that yields are going to move higher. And this has been one of the better stocks within the financials. We've got a couple of hollow candles trying to hold right near price support, this breakout. So I do use this kind of stuff in my trading and trying to set up high risk or high reward to risk trades.
Mm-hmm.
Sometimes they're high risk. We don't like those.
No.
All right. So I was actually trying to get through some of the questions, but I do realize now we have just gone past a little bit. Any final thoughts you have today for the market?
Oh gosh, I'm just, I'm interested. I did notice when I looked at my SPY chart, we've now lost that rising trend channel between yesterday and today's move, and I think that's something to keep an eye on. I went on a PMO sell signal a couple days ago last week, and we're starting to see that failing momentum. I don't see it as being a huge detractor. I think we're going to find support rather quickly, but it is interesting to see things moving below that 20-day EMA and out of a rising trend channel.
Yeah, there's negative divergence in play on the S&P, so we could see more consolidation, no doubt about it. And a lot of times, and I'm sure it's this way on the PMO as well, when you get these crossovers to the downside, a lot of times you'll see consolidation. It doesn't mean that we're entering a bear market. That it's not giving us that signal. It's just telling us that the momentum to the upside is starting to fail and fading. And so consolidation, I mean, if you look back at some of these other MACD crosses from what you consider like overbought territory, when you get these crosses, a lot of times it's just simply followed by sideways consolidation and frustration among those who are expecting the market just to keep going up every day, which it just, it's not going to do.
Right. So, well, I don't know, between last November and this, wow. The thing that's, been very nice is that when we have seen weakness, it's been pullbacks a little bit, but mostly consolidation. I mean, there just hasn't been, that price shock, super decline. And it just doesn't have the earmarks of that happening anytime soon either. So,
yeah, we really haven't seen much of a sell-off since back in October, November, right before last year's election. We got the move up. We barely have even tested the rising 20-week moving average throughout the entire year since then. So, yeah, it's kind of hard to be bearish when the market just continually keeps pushing to new highs. But eventually we will get one of these, moves where it's going to test our metal a little bit. And, we're going to get a 10%, 10% decline. And after moving up as much as we have over the last year, if we think about it, it probably wouldn't be a horrible thing to get one, but I don't know.
It'll feel a lot more painful because we haven't had to experience it in a while.
Exactly. It would be very, very painful. So anyhow, that's a topic for another day, right? We don't have to worry about that right now.
I hope not.
Yeah, hopefully. Anyhow, do want to thank everybody for joining us today. Also want to thank Grayson for stopping by and explaining the member dashboard and some of the great features that Stock Charts continues to roll out. We're going to have some more news, it sounds like, pretty soon. So I'm sure Grayson or Bill Shelby, one of them, or maybe even Chip, might get Chip Anderson on here to go over some of these enhancements that they continue to make, which is awesome. Also want to mention that tomorrow we've got Greg Morris joining the show. So Greg, a 40-plus year technician, works a lot with candlesticks. I think we're going to have a great conversation with Greg, what he sees in the market. And then another Greg Schnell, will be joining us on Thursday. He'll be in talking about the point and figure charts. And then, of course, Aaron will be going over chart patterns on Friday. So make sure that you have all of that on your calendar. It's going to be a great end of the week as we go through Wednesday through Friday. Again, I want to thank everybody for joining us today. Please complete the survey as you exit today. We'd love to hear your feedback on today's show and also any suggestions for improvement as we go forward. As a reminder, Market Watchers Live now airs 5 days a week from Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll be back on Wednesday. Happy trading.